Hey everyone. Hopefully you're having a great day. Hopefully you're not stressing out about your investments. Hopefully you got your portfolio size correctly and your position size is correct. My name's Andy. My channel's Finding Value. If you like making money, if you want to know more about commodity investing, precious metals, this is the channel that you need to click subscribe to. And if you like this content, give me a thumbs up, leave comments below on anything that you guys want to know. So I want to talk about previous bull markets. Previous bull markets, their returns, what I think about the upcoming bull market, and I'm going to talk a little bit about ratios and how out of whack the ratios got during COVID. So let's go into this. This is the previous bull markets. I'm just going over the last bull market in the 2000s. I want everybody to understand what these I'll call it different metals and energies in last market, what they returned. It doesn't mean that this is going to be the same. I just want you to know kind of a little bit of history on the last bull market so you have something to gauge what the future commodity bull market could return. Gold went up 8 times, silver 12 times, platinum 7, and palladium 0.2, which means palladium actually went down the last bull market. It was only 20% of its original value. Copper went up 7 times, nickel 11 to 12 times, tin 8 to 9 times, and zinc 6 times. In the energy markets, we've got some pretty big movers. In the 2000s energy bull market, oil was 12 to 13 times, uranium was 23 times, natural gas was 8 to 9x. And the company returns, just to name a few, EXK did a 1,267 times return. Paladin Energy and Uranium did a 1,200 times. Yamana Gold did a 400x. Chesapeake Energy did a 90x. SM Energy did a 16x. Norilsk Nickel did almost a 30x. And Vale is a 20x. Those two are on the right are diversified miners. SM and CHK are energy companies. Now, do I think we're going to get these returns from where the stocks are today? Probably not as big as those 1200x, because we've come off the bottoms quite a bit. And it's very important to buy at the bottom of the bottom to get those returns. But I do think we could have 100x or 50x or something like that, which still is a life-changing move for most people. Now, here's my opinions. Some comments were asking, what do I think the best commodities are? What has the most leverage? I think oil was one of the best opportunities in the summer and fall of last year. I think uranium is at ridiculously low valuations right now. I think these two areas are the best opportunities for upside in terms of leverage from those bottoms. Uranium is still very, very low. Oil got to a ridiculous low in the summer of last year and fall for a lot of the producer companies. Silver, I think, could be another area that could be a very large returner. And I would put that in the top 3. And remember, I don't know which one's going to be the biggest returner here. So this is just my opinion. Nickel, tin, and copper are also very high on my list because they're being used in ever greater quantities in a lot more things this bull market than the last bull market. So even though we may see the last bull market, the valuations on some of these got lower than I've ever seen. And the demand for some of these materials is greater than we've ever seen in the future. We also have graphite, platinum, natural gas. They're also on my list, and I think they could potentially do some crazy things. Every single one of these materials, or energy, however you want to say it, they could return absolutely massive amounts of returns for some of the companies and producers that are in these areas. I also think holding a little bit of physical platinum and silver is a very prudent thing to do. I think it's very smart to own some physical of both of those. Now I'm going to go over some of these and why I think they're so good. And it deals with the valuations. So these are the valuation lows, and these are ratios. And if you don't know what a ratio is, it's an asset priced against an asset. Basically, it's saying this is to this. We use it a lot in engineering, and you use it a lot in chemistry, actually. You create these big tables. But either way, it's a ratio, and it's compared to history, and then we see what is cheap in relationship to history. That's what we look at the ratios. Oil reached a 1 to 90 ratio. That's gold is 1 ounce to 90 barrels of oil. And I've never seen it that high. Or you could say that low being the valuation is super low for oil. So I've never seen that disparity ever. The market's never seen it that. And the highs on the opposite end, where you say oil valuations are high, are typically around 1 ounce to 8 barrels of oil. 1 ounce gold, 8 barrels of oil. So if you were to do that again, if you were to go from 90 to 8, that's an 11 to 12 times ratio compression against gold. Last bull market, it was only a 5x compression. And that manifested itself in a 12 to 13 times price increase. I don't know what an 11 or 12x ratio compression would look like if gold were to go to $10,000 an ounce. At a 1 to 10 ratio, that means $1,000 barrel oil at a 1 to 10 ratio if gold goes to 10,000. And we're sitting here at nothing in comparison to that. And I don't know if it's going to go that high. I don't know. But given history, that is what it could compress to. It would be an anomaly if it didn't do that. It's done it every time in history, has gotten to a 1 to 10 or lower. Uranium's at a 1 to 62 ratio. Let's say it hits a 1 to 4. That's 1 ounce gold to 4 pounds of uranium at the top. That's a 15 to 16x compression. Last bull market, it was only 8 or 9 times compression. So we're doubling the compression on gold. And that 8 or 9x compression resulted in a 23 times price increase. And I want you to notice oil did a 5x and was roughly double that compression because gold went up at the same time, and it was a 12 or 13. That one, last bull market for uranium, was an 8-9 times compression, and it went up 23 times. So that double compression doubled the price. So it was a direct correlation. If we're doubling the compression again, that means that 23x could go to a 46x times the price of today on uranium. Oil could do another double, little over a double. So that could be a 26 or 30x. I mean, these are crazy amounts of leverage that you can get using uranium and oil. And silver. Silver is another one that I think could potentially just absolutely rip it. We have a 100 to 1 ratio. That 100 to 1, I know it got a little bit higher than that, but that's what you could get the physical at. And some of the silver mining companies got to the paper. They're indexed to the paper price. And I think they got to extreme low valuations in March 2020. I think it's possible that silver could hit a 1 to 10 ratio or even lower than that. So that compression could be a 10x compression or maybe even more off the bottom. It could be even a 20x. Last bull market did a 3x. That's all it did. And it did a 12 times price increase. This could do a 36, 40, 50x upside move in silver possibly. It really could for the price movement. So I wouldn't discount that either. And if you notice, I'll share my holdings of what I hold in my portfolio. And I'll show you exactly what I hold and how I'm playing this. I want to show you also this. This is the MIT and Rio Tinto looked into the materials that are going to be used for renewable energy and for advanced, we'll call it advanced technologies, advanced robotics, all these different types of electric vehicles and technologies that are coming out. This is the order that they believe that these materials will be used in those future technologies. They've got tin, lithium, cobalt, silver, nickel, gold, tungsten, vanadium, graphite, zinc, PGMs, and salt. And if you notice, this channel likes the majority of those materials. I'm trying to get more exposure to tin myself. I think lithium's probably a good one. I don't know if they have the market balances out in the future like some of these other metals. Cobalt, I think, will be reduced. I think they're trying to go more with nickel. So I've always been favoring tin, silver, nickel. I do have gold. I'm favoring a little bit of graphite and some zinc and the PGM platinum. That's the one that I'm going after. So those are all on those lists. And I think that they're going to be ever greater demand in the future. And looking at history of the recent bull markets, and I can go back real quick just to refresh your mind on this. Nickel did an 11, 12x last bull market. Copper did a 7, tin did an 8 to 9, and zinc did a 6. Silver did a 12x already. Platinum did a 7x. So I think that all of these that are used, all of these, the gold, silver, platinum, copper, nickel, tin, and zinc, I think they're all good because they're used in the renewable market. So I think there's going to be greater demand for them. And they already proved themselves to go up quite a bit during the last bull market. So I think that's an excellent opportunity to purchase those materials. So the conclusion here is I'm overweight the metals and energy, and I'm pretty sure that anyone who's been on the channel, they know that. I am looking for those materials that provide very much value, a lot of value to society. I'm looking for materials or energy with projected future deficits, because that's where the price really starts to move. I'm also looking at those that performed well during the last bull market. I'm trying to tie this all together. And that's where I'm getting a lot of these materials and saying, hey, look, let's look at tin. Let's look at silver, platinum. Let's look at some of these other ones like nickel and copper because of the renewables. I think they're all going to kill it. Absolutely demolish it. The downside values are greater this time in some materials than ever in history for those valuations and ratios. I'm almost lost for words because the opportunities here are so large that I've never seen anything in my life, and I don't know how to describe it. It's like we could have a bunch of remember, these things are extremely volatile. That volatility is power to the upside. So when a deficit occurs, I think everyone's going to start to panic and then they're going to run at it. And that's when you have to be positioned before it. This information that you know in this presentation right now is invaluable. I think that you need to sit down and think, how should I lay out my portfolio? What percentage should I put in each of these metals, energy, however it may be? And again, so this is my opinion. And this is some data I grabbed off of articles that I've read and whatnot, and some of these charts. But now is the time to think about it, and now is the time to position. And then it's just hold. Because I have a feeling that something's going to come, and it's going to jolt higher. It's going to be a squeezing up, and then all of a sudden, something changes. And you might see a 5-10% update, and then it just moves. It goes. Copper is experiencing near-deficit experiences. Copper is at near-deficit experiences. So they're running deficits, their inventories are running down, and what you're seeing in price is vertical. I have a feeling that a lot of these other materials are going to go vertical. I feel energy is going to go vertical. I feel like uranium at some point will go vertical. I don't know when that point is, but you now understand what the leverages are, and it's massive. The leveraging to the move and to gold is massive. We've never seen it this leveraged ever before. So I think you got to sit down, look at your portfolio, look at every single name you have in your portfolio and say, is this worthy to be in here, or should I move it into something that I know more about? Or how should we strategically position amongst the metals, the royalty companies, the precious metals, the energy sectors? Like, how should I put this in? And I know that you guys are looking at me for a lot of financial education and information, but you have to be comfortable with it, and you have to know the companies. And I would even do some research into each and every company. And the reason I say to do that is this is the opportunity. It's right now. Like you won't experience this again in your life. And me telling you this, you should take it and really run with it. This isn't just throw some money in some companies and hope. Like, if you spend the time and you find some really good companies and you understand the companies that you own, this is going to pay you back probably more so than anything else that you've ever done in your life. You could get 100 baggers out of here, 100 times your money. You put $1,000 in, it's $100,000. You put 10 grand in, it's $1 million. That's the type of returns that potentially could happen if you go after the higher risk stuff. Even if you get a 20x or a 30x or a 40x, you are killing it. $1,000 into $40,000. And if you've got a pretty good sized portfolio, that can change your life. So now's the time to think about this stuff. You know what the leverages are. You know what the materials that are used in the renewables. You know what's going on. You can see the future deficits. Go back and look at my videos. Look for some of these videos and start watching through them, because I go over projected future deficits. I go over the ratios. I go over all of these things. And it's invaluable to know this stuff before this bull market comes. And I think some of them are coming very soon. Oil's been on a tear, and I'll show you my portfolio and what that looks like. And I'll show you how oil has gotten quite large and dominant in my portfolio. So if you guys like this content, subscribe to the channel, give me a thumbs up, leave comments if you guys have any questions. Thanks for listening. This is Finding Value.